Friday was a huge week in global financial markets, not just in the stock markets, but in the commodity markets, in the currency markets. It all basically started with rumors coming out of China that the Chinese government was getting closer to ending their zero COVID policy lockdowns, and so reopening more of the Chinese economy, and that sent stocks related to China soaring. In fact, the Hang Seng Index was up, I think, 6% on Friday, but specifically the stocks related to mainland China that trade in Hong Kong had their biggest weekly gain in 7 years. They ended up 9% on the week, but it wasn't just stocks that went up. Anything tied to China went up, particularly industrial metals. Copper was up 7.5%, aluminum 4%, zinc 5.7%, tin 6.25%. In fact, the way most people believe the Fed's policy will succeed in reducing inflation is by reducing demand, by weakening the economy, by putting employed people out of work. It's going to reduce demand. Americans will have less incomes and therefore they'll buy fewer products. Or by raising interest rates, if Americans are forced to spend more of their income servicing their debt, they have less money available to go out and shop and buy things. Or if interest on the money they have to borrow to buy those things goes higher, and now Americans have to pay higher interest on the money they borrow to buy consumer goods, well, they'll buy fewer goods because it now costs more to buy those goods because it costs more to borrow the money to buy those goods. So everybody is focused on the way the Fed is going to reduce demand and therefore bring down prices. The dollar did not make a new high. And my point was that the dollar's failure to make a new high was more of an indication that the high was in and the dollar was in the process of reversing. And I had also pointed out several key reversal weeks that we've seen in the foreign exchange markets where the dollar has traded above the previous week's high and then closed below the previous week's low. And these trading patterns were indicative of a reversal, and in this case, a top, because we're reversing the rise in the dollar. Now, it has been rare in the past. I don't think it's going to be that rare in the future, nor do I think $50 up moves in the price of gold are going to be that rare in the future. I think before too long, we're going to finally see the price of gold rally by $100 in one day. Now, while it's true that the mining stocks as a group, as measured by the GDX or the GDXJ, did not make new lows this week, there were some bellwether stocks that did. In particular, Barrick Gold and Newmont Mining. Those are the stocks that are probably most heavily owned by the institutions. Those stocks made new lows on the week, indicating to me that the institutions were throwing in the towel on gold stocks and they dumped the stocks that they owned. But it's only a matter of time, and not much time, before investors recognize that the price of gold is not only going to rise commensurate with the cost of producing it, but it's going to rise more, because as investors lose confidence in the ability of the Fed and other central banks to rein in inflation, now they're more motivated to hedge against inflation because they no longer can count on the central banks to protect them. During the same week, the Nasdaq was down 5.8%. That is huge divergence. And look at the Cathie Wood ARK Innovation ETF. That was down 9.7% on the week. Basically the mirror image of the GDX. Again, lots of investors loaded up on these stocks. Hardly any of them own the gold stocks. But if you look at the FANG stocks in particular, and I have been pointing out the relative weakness in FANG, Meta on the week, down 8.5%. It's now down 75% from its high. It hit a new 52-week low on Friday, but then did manage to close positive. as did Alphabet, formerly known as Google. It also hit a new 52-week low on Friday, but it closed positive. But on the week, down 10.2%. It's down 43% from its high. Amazon, another stock that hit a 52-week low on Friday that managed a positive close, but it still closed down 12% on the week. 52% from its high. Netflix down 11.8% on the week, 63% below its high. And even Apple, which is sometimes considered the second A in FANG, even Apple was down 11% on the week, now 24% from its high. Apple now finally in a bear market. And even if the company doesn't go bankrupt, if it manages to survive and restructure somehow, you could still lose 90% of your money, 95% of your money. The stock can collapse, then it could do a reverse split, and then it can collapse again. And unfortunately, there are a lot of novice investors who are about to learn this lesson the hard way. Of course, it's not just tech stock investors who are going to learn a very expensive but hopefully valuable lesson. Also, the cryptocurrency investors or speculators are going to learn an even more expensive lesson as they get wiped out as well. Now, Bitcoin did manage to rise on the week, unlike tech stocks that fell. And in fact, the Grayscale Bitcoin Trust managed to eke out almost a 1.5% gain on the week. But Bitcoin's 4% rise on Friday was really nothing to get excited about, considering that Bitcoin is barely back above 21,000, and Bitcoin's 4% rise came on a day when gold was up 3%. Goldfields shares soared 16.5% on the news that they may not have to buy Yamada because Goldfield shareholders were upset that the company was buying Yamada, but Yamada itself rose 20% on the news that it's now going to get a better deal to be acquired.
I prefer not to look at it as a premium, Andy, so much as, if you don't mind me saying, it's intrinsic value. And I've been saying this for the longest time. It's about paying fair value. And if one is paying fair value and it happens to reflect itself as a premium, because the share price is not reflecting fair value, it is about fair value at the end of the day. It's not about the premium.
Now, there are two companies that were combining forces to outbid Goldfields, and they are Agnico Eagle Mining and Pan American Silver. Agnico Mining shares were up 5.7% on the day. So they went up even though they're buying another company, although AEM underperformed gold stocks in general. But Pan American Silver actually went down. Shares made a new 52-week low on the day. At one point, shares of Pan American Silver were down better than 9% on the day. But by the end of the day, the losses were paired and the stock closed down just under 2% on the day. Average hourly earnings were up again, a little bit hotter than expected. We rose 0.4 rather than 0.3. Again, the foreign exchange markets and the precious metals markets shrugging off those hotter than expected numbers that would portend hotter inflation. Average hourly earnings also up 4.7%. That was in line, as was the average work week. But the real story that is not being reported is the quality of these jobs and how meaningless this unemployment rate actually is. So Americans are really struggling in this economy. Their earnings are down, their cost of living is up. That is why the Republicans are going to do so well in the elections. And that's also why all this talk about the fact that we don't have a recession because we have such a strong labor market is so ridiculous. Because we don't have a strong labor market, we have a weak labor market. That is the reason that so many people who don't want second and third jobs are being forced to take them anyway because it's the only way they can make ends meet. Now, of course, one of the other ways that they try to pretend that we're not in a recession is by pointing to this low unemployment rate of 3.7%. And they're saying, well, if the unemployment rate is so low, we can't be in recession. This unemployment rate is absolutely meaningless because it captures such a small percentage of the population that is in fact unemployed, because it is very difficult to qualify as unemployed in today's economy.